Hello and welcome back. In today's video, I'm taking you through my journey of turning a $46 account into something much bigger, all using simple price action strategies. I'll break down how I used setups like the double bottom, rising wedge, and a few other powerful strategies to grow a small account step by step. So if you want to learn how to trade smart without relying on indicators, make sure you hit that subscribe button and turn on the bell. I post longer videos, detailed videos explaining each strategy in depth. And don't forget to join my free Telegram group for daily signals, market tips, and trading setups. The link is in the description box below. So without wasting much of your time, let's jump right into it. So to kickstart my trading, I started off with volatility 25 index. So in the volatility 25 index, the first thing that you need to do is have a clear chart, right? So after having a clear chart, you then draw the lines of confluence, that is the major resistance, the major support, and then I identified a pattern that is more like a head and shoulders. So let me draw it so that you can clearly understand. So right now I'm putting an order block that is marking the support, but however, it's always a point where the market can go back and bounce back on. Okay, so the other thing that you need to take note of is the neckline that I've just put the shadow zone over there, and the shoulder line that is the point where the price is currently at, right? So after identifying all those major levels, you can clearly see that this was a head and shoulders, and this pattern is always bound to go back to the top. So this one was an inverted head and shoulders, but it's just the same, it just follows the same principles with the normal head and shoulders, just that this one is a bullish and then the other one is a bearish, but it all follows the same principles. So now it's time to execute, and then let's see if we can get profit. So I've executed the market. So take note of the risk management skills that you need to apply, because sometimes you can over leverage your account and this can result in bad news for you. But then even though your market is going in the intended direction, sometimes you might not live to see the profit. Anyway, as you can see, I've already doubled the account. The market is going in my direction, so it means this was a very clean setup. As you can see, there was no indicator, there was no fancy tool, there was just simple price action. And then currently now, to set the take profit level, you can set it at the neckline, but then at this point I'm going to set it at the fair value gap that was formed, as marked by that big shadow zone. So this was a fair value gap point that you need to consider, because the market can actually bounce at that point and fail to break to the upside to continue in its direction. So the thing that you need to take note of, as you can see, the market has already hit my take profit, but it's now reversing. So this is the fair value gap effect. So you need to consider all those levels before you execute the market, because they are important levels. So a fair value gap is a point of imbalance that the market always feel obligated to go and rebalance that point. Anyway, as you can see, I've closed the market, and then now we are in $155. That's not much, but at least we are going, and we are going to continue. So then I moved on to volatility 100. So take note of this one, because it is very important. This is one of my major setups that I usually trade. If you look in almost my videos, you can see that this setup is always almost in each and every one of my videos, because that's my favorite, right? This one and also the rising and the falling wedges. So is one of my idols once said, sometimes it is just important for you to just master one technique and then just perfect it and make profit with it. Anyway, this is the double top pattern. As you can see, at this point the two tops were touched by only the wicks, not the bodies, but then the wicks are just as good as the bodies, because they show that the price actually reached that point and then came back. And then as you can see, this was a clear setup for a sell. So this is how it moves. It will go down and then it will break down that line and then retest it and then continue going in a bearish movement. So what we are going to do is we are going to execute the market. Actually, I couldn't get it in time, but then it is still valid. We are going to continue in this trade. We are going to ride it at least to the neckline where there is that second shadow zone, and then maybe continue it with it even further. But anyway, I have executed the market. So if you follow my Telegram channel, I'm pretty sure this setup I actually posted it in the group, and a lot of people made profit from it. But then well, if you were not there or if you didn't catch it, better luck next time. I will always post more, so just make sure that you are in the group so that you don't miss on these important updates. So I adjusted my take profit. As you can see, I've put it at that level, and then we are going to continue with our trade. So as you can see, right now we are in $438 profit. This is a lot considering this account was very small, and our take profit has already been hit, as you can see. So you can actually close this trade, but then if you watch most of my videos, you can actually know where to put the next take profit. Anyway, I closed, and then I'm going to visit the Euro GBP. So using Deriv, you can actually trade the currencies and the synthetics in one account. So what I'm going to do here is I'm going to identify the areas of confluence, that is the support where I've put the shadow zone, and then the next area that I'm going to identify is a trend line that was followed for a long time, right? So after this trend line was followed for a long time, the market created something else that is different from this pattern, right? So judging by the looks of it, you can clearly see that this one was a falling wedge, right? So this falling wedge was broken to the upside, right? So after the falling wedge broke to the upside, the market came back with a retest at the shadow zone where I'm putting the shadow zone right now, and then it then continued, right? It then continued going up, right? So after it continued going up, we can clearly buy at this point, but then this wasn't the only thing that was on this chart, right? So let me identify another pattern that I saw on this chart so that you can clearly understand, right? So another thing is right now you connect the highs and then you connect the lows. So after connecting these lows, at the point where there was a low, there was a previous low before the latest lower low, the market formed a support that was once broken to become resistance, and then it became support again. So at this point, it clearly signals that it has formed a Quasimodo pattern, right? So you know how to trade a Quasimodo pattern, but then this pattern wasn't that powerful because it has already happened, right? But then it clearly signifies that the market is still in a bullish direction, right? So in a bullish direction, we are just going to execute the market and then see if we can get as much profit as intended. So I don't like this currency because it is not that volatile. So the soon it makes a loss or a profit, I'm just going to close it because I'm not going to hold it for a long time. It might actually disturb me to enter other trades. So as you can see, we are in $40 something loss, and the moment it reaches the break even or at least $100 loss, I'm going to close it because I'm not going to hold this for a very long time. So let's see if it is going to correct itself and go up. So let's just wait. So after some time, as you can see, I closed the market because this wasn't going in my direction. Anyway, let's move on to the next trade. Sometimes you lose, sometimes you win, and then sometimes it is important for you to know when to stop the fight, or you have to leave to fight another day. Anyway, in the volatility 1 second, so this is volatile, you have to take note of that. So the first thing that you need to do when you open a chart is identify if that chart is volatile before you execute the market, because you need to understand the risk management skills that that are required for you to execute a market anyway, right? So as you can see right now, I've already drawn the major areas of confluence. I have already drawn the lines of support and the lines of resistance anyway. So right now, as you can see, the market followed some points that it touched. Those are the lower lows at the bottom. So it touched the lower lows at least 3 times. So that means it is valid, right? And then as the market was retracing, it was also creating lower highs, right? So it clearly signifies that the market is in a downtrend, right? It is also in a falling wedge. So the principles of a falling wedge are always clear. You know the principles of a falling wedge. You always have to look for bounces at the support, or you have to look for a break to the upside, right? 9 times out of 10, the market always breaks to the upside, like so. Anyway, as you can see, once it breaks to the upside, it then comes with a retest, and then it continues going up again, and then it will have to reach the take profit at the top where there is a resistance, right? But then at this point, as you can see, there was also a wick that touched the support, right? So this wick that touched the support clearly showed that the market failed to break that support twice, forming a double bottom, right? So this double bottom was confirmed by that neckline where I'm putting the shadow zone. So this is also going to be the point where the market is going to reach before it retraces or it does a retest. So it is a clear buy. It is a clear buy, right? It is a clear buy. I've executed the market. If I lose this one, I'm going to anyway, sometimes you lose. So this one is a clear setup. I don't know if you need more explanation on this, but then if you have any question, you can always DM me. I will reply to your comment for free, right? For free, guys. You can always ask me anything about Forex. I can give you a hint. I can give you an advice. I can give you anything that you need for absolutely free, right? If I don't know, of course, I can never know everything in the Forex. I will just tell you that I don't know. So it's just how the game works. Anyway, as you can see, I'm in profit. So I'm not going to wait for it to break to the upside, because it is also obviously going to face the resistance of that line. But however, if I were going to, I would put my take profit at that point where I've put my take profit, because that's basically the next area of resistance that I'm going to face. Anyway, this is what I had on today's video. So make sure that you subscribe to this channel so you don't miss on any important trading advice or any insight that I'm going to post in my Telegram and also my TikTok or YouTube. So make sure that you are subscribed in all those channels so that you don't miss on any important update that I'm going to post. If you like this video, just leave it a thumbs up and leave your comment in the comment section below. If you have any question, just put it in the comment section below. I'll be more than happy to reply to you guys. So see you in the next video.